Good day to everyone, and on today's video we're going to have a look at the traditional markets with the Dow Jones, the SPY ETF, Starbucks, and a Tavern pick showing the power of options that provided over 190% in return. Stay with us. Okay, so we're on the Dow Jones 3-day chart now. And after we did have our multi-year bull run, we had the market level off and test these moving averages here. It took us to test these highs again. Then we had rejection with the worry of recession. The sellers stepped in, took price action to the downside. We only had a 18% drop instead of that 20% drop that would then give that title of recession. So with that, we had price action take that as a positive sign. Took it all the way to test these new highs once more. Again, I'm sure we had some profit taking. We had the sellers step in, took price back down to test this trend line of support of 24755. Again, we held there and didn't break down to the 200 moving average again. So the market took that as a positive. Began to go to take price action to the upside to some new all-time highs. But with the trade war rumors and also the yield curve, took price action down to this 100 moving average again. And we have price consolidating and being uncertain. We did have this nice 3-day engulfing candle, but due to the recent news of the talks not happening, I believe we're going to have some more downside, and I think futures are currently down over 200 points. So either way, that's fine. I was looking for this gap on the daily here to get filled. This is around the area of 26055. So either way, I was waiting to see, because we are in the middle of a trading zone here, for either price to go test these highs again, get rejected, come back and fill this gap, or just fill the gap immediately, maybe break down even more to this 200 again, and then come up for some more price action, or consolidate, then come up. So either way, I was waiting to see how the market responds. But again, due to this short-term meeting not happening, I believe we're going to have some more downside for tomorrow. So we'll just see how the Dow reacts tomorrow to that. But let's go ahead and take a look at the SPY ETF. Okay, and I'd like to just take a look at this one on the monthly scale to get a better look at this trend line that has gone back to 2009. And if you watch some of the other videos, you know I do like the longer term trend lines. Okay, so even up until recently, it's shown a good strong support there, and even the whole way through, always showing support and resistance going back years. So let's get a better look. See here on the 3-day, again, we could see how price action respected this trend line, and that's a good positive sign for the market. We do have, again, this 3-day engulfing for the SPY ETF, but again, we have that news to deal with. So on the daily, not too much different than Dow Jones. We have a gap to be filled here, and again, I was expecting to see either we go to new highs again, to test to see if we can get to new highs again, and then reject and fill this gap, or just come down immediately and fill this gap. So again, I was looking to maybe pick up some more options if we get back down to this trend line, and after we fill this gap. But we're going to have to see how the market reacts to all this news for the upcoming week. Let's take a look at Starbucks. Okay, and again, I have the Fibonacci extension set up. Starbucks, again, had a great run. Not too hard to know why. You drive by in the morning, you can see the drive-throughs, how full they are. But again, we could see the extension, price action following it. We had a jump above the 618, now we have consolidation and holding the 9 exponential. So again, looking good for Starbucks. But on the daily scale, we could see, again, we have this gap to be filled here around the 91 and 12 cents. So I'm going to be looking for that gap to be filled to maybe take a position there. But again, if this price action decides to take off and take off without me, that's fine. There's other opportunities, but for the short term, I'm looking for this gap to get filled and then take a position at that point, or at least think about one, again at the 91.12. Okay, so let's jump over to that other stock that's done so well that we spoke about earlier in the video. It's Digital Turbine. APS is the symbol, APSS. And I want to take a look at this one on the monthly scale to get a good look. And I'm always looking at charts, and this one caught my attention for a couple different reasons, but we could see from the beginning we had a nice run here. Right, and then we had, games being played on retail, which is fine. But I was looking at it because we did not drop to new lows after we had, some price action go to the downside here. So again, we had price hold, which is a good sign for penny stocks. Then we had some upside, but then the price didn't break to the new low. Right, we got a higher low, and we had this nice rounded bottom, so that's when I started paying attention even more closely to this stock. So again, we had some good movement here on the 618. We had a strong pop on there. Then over to the 0.786 on the extension, holding the 9 exponential, and we had price just continue to go up. So on the 0.786 is when I believe I started taking some positions, and it's looked good ever since then. It did have some good news of a partnership somewhere in the middle over here. I'm going to put the article in the description so you could take a look at that. So that did help price action to continue some nice upward movement. But at this point, it's definitely looking like we could see a correction. This example was just more importantly to show the power of options if used correctly. We can see, as I said, it gave us over a 190% return. This is just one contract, but again, it's just showing, if used correctly, the power of options and what they can do for you and the potential they have to increase your portfolio great amounts. But just a brief overview of that. If you think that a trend is looking good and bullish for the long term, it's going to continue to have some upsides. What you want to do is buy a call option, and you want to buy that at least 2 months out, and you want to sell it 30 days before expiration on a green day, right? Because 30 days left into the contract, they start to lose value. So if you're extremely bullish and you think that the trend is going to really go have some upside for a while, you could buy an option even 5 or 6 months out, right? Again, you just have to sell it 30 days before that expiration, give or take, because it will start to lose its value 30 days into that expiration zone. So you want to, again, sell it on a green day and sell it 30 days before it expires. Now, on the flip side, if you think that there's a bullish trend and you're going to see some continued downside, again, you want to buy a put option and buy that 2 months out, and again, sell it on a red day 30 days from expiration. Because again, it will start to lose its value from 30 days to expire. So again, if you're really bearish, say you have the recession coming and you think you're going to have some continued downside, you could buy put options 5-6 months out. But again, the longer that you do buy the option, the longer out it is, the more expensive it will be. Due to, obviously you do have more time then to receive your money back or gain more profits. Okay, so that was just a quick overview of options, call and puts if you're bullish or bearish short term. But they could be a very, very good tool if used properly. Now, the reason why I'm trading as normal, even though we have the yield curve inversion, is because historically there is some, time that you do have. Okay, and this article here has a lot of good information on the yield curve itself. So I'm going to go ahead and leave it in the description so you could read it over. But it does say, here's how the stock market tends to perform since 1978. Okay, now the yield curve inversion of the 2-year note and the 10-year note has predicted recessions better than any analyst. So it's something I take into high regard, right? Now it says on average the S&P has returned 2.5% after a yield curve inversion in the 3 months after the episode, while it has gained 4.87% in the following 6 months, 13.48% a year after, 14.73% in the following 2 years, and 16.41% 3 years out, according to Dow Jones market data. Okay, so again, this article has some good charts, shows different times and recessions and then how the yield curves have happened. So I will go ahead and leave that link in the description. Now, very briefly, what the yield curve is just a very good example of supply and demand. Okay, so you have investors taking their money out of these short-term investments and putting them into long-term bonds, excuse me. So now you have the demand rising, and the government is going to pay less on those bonds. Okay, so in the short term, you have investors taking out of those short-term investments, okay, and moving it over to the long term. So it's showing that the demand is not high for those right now, and it's going to cause the price of the yield the government pays to go higher. So there you have the inversion, and it does show investors' confidence, what they think. So short term, they're a little hesitant and weary of all the rumors of the trade wars, and as well as the yield curve itself. So they're taking the money out, putting it into the long term, because historically the markets have always recovered, right? So even with the recessions, they're good because nothing could go up forever. Things need to correct and find its right price. So that's the inversion, and it shows again, like I said, just how the investors are thinking about the economy and how they want to put their investments. Okay, so just a side note, I want to just ask that people bear with us with the audio. I have something coming in to rectify that situation, hopefully. And with that information, I'm going to leave the video here for today. I do wish everyone well, good luck in your trading, and thank you for tuning into the Tavern.